The difference between grasslands and other farming initiatives out there is primarily driven by my understanding of how to structure a business. What we wanted to structure was a fund where individual investors would have an opportunity to join in and enjoy the company of other like-minded investors and enjoy the safety in numbers of having other investors with a similar interest, as well being in a vehicle which was, we think, moving in the right direction for wealth preservation. There are a number of other agricultural initiatives out there. The first thing that I would like to talk about is publicly held corporations. There are a number of these guys, and they are very substantial. They've got a lot of expertise. They're very efficient. They're operating all around the world. And many of them have gone to Wall Street and become public corporations. What we notice about that, and notably Attico Agro as one of these companies, maybe 3.5 or 4 years ago went public. A lot of people invested in it. But if you go to Wall Street and you want to buy stock as a way to invest in farmland, the problem is if you go into one of these public companies, you really don't have that land ownership. You are not a part of the ownership of that land. What you are is a part of the Wall Street equities program. The truth about this stock is, and it's well run, they do have some farmland in Uruguay. Mostly it's Brazil and Argentina, this particular company. They began with private money. They went and bought a lot of grasslands, which then are grazing lands. They converted them to farmland. That gives you an immediate bump in the valuation of your property. They did this at a perfect time so that they were in step with the significant appreciation of farmland in South America. They then sold a couple of these, produced a very powerful balance sheet, and went to market with their IPO with this very powerful balance sheet. But the people who bought the stock did not participate in that private aggregation of funds in that balance sheet. They're now a part of an equity where the return is based on whatever the cash crops return. And over the last 3.5 years, it opened at $8 or $9. It went as high as $13. It's been as low as $6 and is currently back at $8 4 years later. So investors have really not realized any appreciation. It's going in circles. So we are not interested in being public. We're interested in being a private fund. Our private fund, the investors enjoy that land appreciation within the first 1.5 or 2 years. Our investors have enjoyed about a 20% land appreciation. And we'll be planting in the next 4 weeks or so for a crop which we will harvest next fall, which will be May, June, down under the Southern Cross. So primarily that's one of the bigger major differences. Now there are other business opportunities out there. A lot of them exist in the United States. We decided we didn't want to go to the United States because it's very complex. There are lots of regional differences and there are federal incentives to both grow and not grow. And we grew up as an agrarian culture where people had small parcels. Now, some of these big companies have aggregated a lot of the bigger parcels and are doing that, but it just ended up being very problematic. So we don't see other people doing what we're doing down there.